The American currency has regained confidence and is climbing to new heights, pushing the euro back in the Eurist pair. However, the European hopes to make a comeback and overtake the American in the near future. For now, though, the greenback is in the lead and is not willing to give up its throne. Last week, the American currency fluctuated near 2-month highs, remaining in this price corridor for a long time. Market expectations regarding the Federal Reserve's key rate put some pressure on the USD. However, over the past 3 weeks, these sentiments have hardly changed. Meanwhile, the dollar's main competitors faced several difficulties, coming under pressure from sellers. At the beginning of this week, the Eurist pair indicated its intention to rise as high as possible, but only managed to reach a peak of 1.775. Subsequently, the tandem showed a decline, sharply dropping to 1.710. On Wednesday, July 3, the Eurist pair traded in the range of 1.739, 1.740, trying to break out of it, but with mixed success. In the current situation, the American currency is feeling uplifted, occasionally outpacing the European one. The results of the first round of voting in France gave the euro a slight boost, but the euro quickly lost this momentum. As a result, on Tuesday, July 2, the Eurist pair traded near the very low level of 1.710. Later, the tandem managed to recover, but the results did not impress the market. It is noteworthy that the euro sell-off was followed by a decline in the stock and bond markets. The current situation is not very favorable for the European, which cannot be said about the greenback. According to the technical chart, the dollar index DXY is at the lower boundary of the ascending channel. The dollar needs to rise by only 0.5 to confirm this upward trend. If the USB bulls succeed, the dollar could rise to the upper boundary of the current price corridor. In this scenario, the likelihood of the greenback strengthening increases by 3 from current levels. The dollar will be supported on its way to new peaks by the hawkish tone of Federal Reserve officials and strong economic growth indicators in the U.S. The continuation of the bullish trend for the greenback until the end of the summer could push the Eurist pair below the 1.500 mark. Experts believe. Recall that the tandem was in this range at the beginning of October 2023. However, some analysts foresee a decline in the U.S. in the medium term. The case for short-term dollar weakening is bolstered by the slowdown in the American economy, which increases the chances of further inflation reduction in the U.S. In this scenario, the Fed rate cut in September this year is possible. However, current forecasts are clouded by mixed statistics from the U.S. Some macroeconomic data often contradict each other. For example, recent employment reports, non-farm payrolls, were strong, while the U.S. unemployment rate has risen from 3.7% to 4% over the past 6 months. Weekly jobless claims slightly increased but then declined again. Regarding the ISM index in US manufacturing, it fell from 48.7 points to 48.5 points in June. Meanwhile, the similar PMI index from market showed an increase from 51.3 points to 50.1.6 points. This complicates the analysis of the U.S. economy, experts emphasize. The upcoming data to be released this week will be decisive for the dollar. If they turn out weak, the greenback will significantly fall. The icing on the cake will be Friday's employment data from the U.S. Department of Labor. If some macro reports disappoint, major market players will seize the opportunity to provoke a rise in the Eurist pair. However, data indicating a decline in the tandem will activate buyers. Experts believe that in the near future, the Eurist pair could rise above 1.1000. Later, in August, a dollar growth trend may start, which will continue in the medium term.